Okay, welcome everyone. We'll start our second lesson. Today lesson will go through our LO2 and we are doing Unit 5 Personal Taxation. My name is Anjum Satar and my email address anjum@ukversity.co.uk. Please, if you have any question, drop me email if you're listening this recording. So we'll start. Before starting today lesson, first of all, we recap what we learned during our lesson 1. Anybody knows what we learned during lesson 1? Lesson 1, we discuss about our LO1, learning outcome 1, understand the theories and principles. Taxation, we discuss about the personal tax, what is meant by and who is liable to pay the tax. We discuss about the tax limit, explain the feature of the tax system. We discuss about the progressive tax and we discuss different types of corporation tax, personal tax, indirect tax. So explain the difference between the planning and avoidance, tax avoidance and tax avoidance. Tax planning is allowed. We can plan tax which year profit will be which year. So we need to be plan our activity. If we'll plan in the middle of the year, so of course we are entitled to plan the full year personal allowance. So we can do planning. Planning is a legal things to do, and tax avoidance is illegal, which we can't. It means hiding the tax, not telling the authorities. We discussed 5 professional code of ethics. We use the abbreviation popular people chat in offices. We discuss, the tax avoidance. And we'll discuss about ethical principles. Popular people chat in offices. P stands for professional behavior. Second P is the professional competency, due care. Third, we discuss about integrity, honesty. We discuss about confidentiality. We need to keep the information of the client is confidential, and we discuss objectivity. We not compromise. So today lesson will go through our LO2. LO2, we have 4 assessment criteria to meet the pass criteria for this learning outcome 2. Calculate the taxable income from the employment, investment, and property. Apply the allowance. Determine the tax value, benefit in kind, and calculate the total income, liability, and national insurance, which we'll go through. And explain how individual can minimize the tax liability. Of course, we need to look around how individual can minimize the tax liability, which we'll go through. Demonstrate how relief for the personal pension payments and charitable donation are applied to the income tax calculation. So that's all will be focused today lesson. Please. Those are listening this recording, this book, which is a Kaplan, will be on Moodle as well. So please follow this if you want to be further enhance your understanding about taxation, because different scenarios can be. So whatever we are doing today, we are doing employment income, we're doing property income, we're doing investment income, and we're doing charity, gift or donation, and we'll go through NI contribution. So all this will be focused. So all we have is chapter numbers all given, and please just follow them. And you will see there the same employment income, which is chapter 3, benefit chapter 4, property income chapter 5, investment income chapter 6, and calculating payable, how much is the liability, and the pension elements we have a chapter 8, and some we can go through, which is chapter 9 is all about insurance contribution. So I'll try my best to meet your, and we'll go through and explain you as much I can within this lesson. Okay, we'll go through. That's the inductive content. What we personal allowance. Anybody knows personal allowance? Personal allowance. What is in the UK tax? 12,500 is exempt. So every year, anybody who earn up to the 12,500 will be exempt. There won't be any tax on it. If you earn more than this amount, there will be a tax, and the tax will be, so first will be up to 34,500, 20% tax will be. If you're earning more than will be the higher rate, which we'll go through in a minute. All so these are the rate table. So from 37, so it's limit this year is increased every year, so that's why always good to be look around the tax rate. So basic rate up to 37,500 is a 20%. If you earn more than 20%, your tax will be 40%. So from 30 to 37,500, anything more than that, even £1, that will be 40 pence tax will be applied on this. And additional rate will be 45% if you earn more than 50,000. Another thing, personal allowance will be, if you're earning more than 100,000, your personal allowance 12,500. Anything more than 100,000, you divide it by 2, your personal tax will be reduced, personal allowance will be reduced accordingly. Okay, that's it. So now we'll apply 2.1, calculate the tax from employment, investment and property income. So if we have an employment income, first 12,500 will be exact. If you have a dividend on investment, so first if your earning is only through dividend, then 7.5% will be the tax first, £1 to 37. First, of course, 12,500 will be exempt. Afterwards is 7.5% instead of. So that's why when we do the tax planning, we can say, okay, we'll pay the dividend instead of salary. So that will help you to reduce the tax, 7.5 instead of 20%. Higher rate band, higher rate, if your earning is more than 37,500, then you have to pay the tax, which is 32.5%. And if it's an additional rate, of course, you have to pay 38.1. So that's the difference in term of the dividend. And if it's a personal allowance, yes, so that's we need to be look around what is a personal allowance. If you have a saving allowance, you investing money into saving accounts, and if your income is up to 1,000 and you're a basic taxpayer, because your taxes fall in the 20% bracket, you're supposed to be pay first 1,000 will be exempt. Anything more than 1,000 you will pay the tax according to the rates here. If you're a higher taxpayer, it means your income is come under this bracket, which is a 37,500 to 150,000, you have to pay. Your exempt limit will be 500 only on the personal saving, vice versa. So we need to be look around all this, and then we need to be, if your dividend allowance is only 2,000 is exempt. If you're more than 2,000, of course, you have to pay the tax on it. So income threshold, as I mentioned, then of course is a car benefit, and we can look around all the rates, which is given in the books further, and of course, we apply all, those calculate the tax, we need to be apply the rate. Okay, when we calculate the tax, we need to be look around the source of income. Is the property income? Is it investment income? Is it dividend income? Is what? And then we need to apply the rules accordingly. So left the relief. If any relief we are allowed, like previous year, if we have a loss, we can loss forward. That will be relief. Okay, and less personal allowance. If any personal allowance, which is we said personal allowance is 12,500, or if your income is more, then that can be restricted. Then non-saving income, we discussed that the employment income is a non-saving income, property income is a non-saving income. Yes, so that these rates will be applied. Then saving income, these rate will be applied. Then dividend income, these rate will be applied. Income tax liability, what you're supposed to be, what you already paid, what we supposed to be paid. Like, pay you earn, pay as you earn, so your tax is deducted at source. Okay, next we're looking now, we're doing calculation now. Okay, calculation of the employment income and investment income. So first of all, this is the example of Nikki received following income during this year. So salary was £50,290. Pay deducted 8,400 tax on it. So bank interest is 1,300 she earned, and the dividend she earned 7,000. So first we're looking the salary. So salary income is 50,000. Yes, that's non-saving. So this is a pro forma. We can use it to further tax return purposes. And the bank interest, we have 1,300, and the dividend we have. You will see there we are putting under each category. Net income, we have total net income, we have 50, 13 and 7, total is a 58,000. We have a total income from all these non-saving, saving and dividend income. Now we have 12,500, which we said that's a personal allowance, and remaining is a taxable income. So that's 12,500 I minus from the non-saving income, which is employment income or property income can be, so we can minus from here. Then now after this, your employment income left 37,790. So first pound from first to 37,500 will be 20%. Anything more than, then when we'll do the saving income, because the saving is only will be exempt now because we are the higher taxpayer because our income is small, so only 500 will be exempt. Yes. So other than that will be 40% tax will be applied, so which we'll go through in a minute. And the dividend, of course, dividend income will be, so we need to look around. The dividend is falls in 5,000 and we are a higher taxpayer or lower taxpayer. So that's, you will see there now income. And the non-saving 37,500, 20%, 290 for the remaining under the employment income, that will be 40%. That's my tax liability under employment income. Then the saving first 500 is a nil, there is no income. Then the remaining, because we have 1300, so 500 no tax, 800 will be 40% tax, so 320. Then we have a dividend. So dividend first 2000 will be 0% because we are a higher tax earner, and then anything remaining, because our income is fall higher bracket, which is more than 37,500, so that's the 5,000. So 5,000 32.5, so that will be 1,600. So when we'll add them all, that will be my total tax liability, or our total tax liability, or Nikki's total tax liability is this. And then she already paid tax to on the pay as you earn on the salary income. So her tax liability is left 1,161 pounds. She's supposed to pay to HMRC as a tax liability. So that's why we can do. Or other way we can, if the employer pay the dividend more instead of salary more, so that her tax bracket will be moved here under the dividend, and dividend first rate is, so we need to look around the tax rate for the dividend. So when we'll look around the tax rate on the dividend, the dividend income, so we'll see here is a 7.5% up to 37,000, but in the employment is a 20%. So there is a gap. So that's the tax planning is allowed, which we can. Okay, anybody any question? Okay, please follow the chapter which will be on Moodle, the Kaplan handout. Okay, next now calculate the property income. Or of course, if you're giving the property on rent, you earning the income. On the income, you have to pay the tax on it. That's also come under the non-saving income. So non-saving income is 141,000 is a non-saving. Then the bank interest in this case, yes, Marcus total income, and the bank interest is 12,000. Dividend is there. So first, as we know, is 141. You will see there no personal allowance. Why not? Because the rule is if you are earning more than 100,000, so 12,500 will be, you can't claim it, because every pound more than 100,000, let's say you earn 105,000, so your 5,000 is more, 5,000 divided by 2, so your personal allowance will be reduced from 12,500 minus 2.5, so 10,000 will be allowance. So now this is 41,000 is more than 100,000, so 41,000 divided by 2, so that will come, what will come? Yes, 20,500. So we need to look around 20,500. 20,500 is, which is mean if you minus from the 12,000, this is 0. So there is no allowance will be. So that's why what we need to do, we need to be careful. So that's why is the no personal allowance in this case. Taxable income is 160,000. This is the non-saving income through property, or can be employment, saving income, and dividend income. And then we'll calculate the tax 20% straight away. Then remaining will be 40% on employment, and other income, saving income is state, because with a higher tax bracket, there won't be any free limit on the saving income, will be 40%. Then will be on the saving additional will be 3,000, that will be 45%, because this falls 145,000. So that's 141. If you add 9, that will make you 150,000, and anything more than 150,000 will be 45%. Yes, so that's we need to be look around. So we need to make sure we will calculate the tax accordingly. So that's a total tax liability. If somebody's income is 160,000, so tax liability will be 55,755 pounds. So if you are earning 160,000 a year, so 55,755 you're just paying towards tax. Then you have a further NI contribution, pension contribution, bit and pieces. So we need to be look around these, and we need to be well aware of. Any question? Anyone? Next we have 2.2 personal allowance apply. Available to all individual 12,500. Deduct the net income, give the taxable income. Not transferable, these allowance from year to year. Cannot be offset against the capital gain and the loss in the use in the last year. If we not use, the personal allowance will be restricted. Personal allowance can be reduced if your income is more than 100,000 and you need to be divided by, or 50% can be reduced. So this is all again is the same example. We can apply the personal allowance and we can calculate our taxable income, and we can calculate the tax liability. Next we're looking 2.3. What is a 2.3? 2.3 is a determine the taxable value of benefit in kind. Benefit. So let's see, company give you car and you're using the car for your personal. You know, many people are very pleased in the company. Oh, I have a company car. Yes, of course, it's a company car, new car. You will be very pleased. The company gave you car. But actually, what's happened? Your tax allowance, which is 12,500, that can be reduced to 5,000. So you will only get 5,000 free tax limit, and the rest amount you have to pay the tax on it. It means the car will cost you every week around 50 to 60 pounds. So we need to be well aware of to make the decision either to go for the benefit to take a company car, or you use your own car and claim the fuel. Yes, so fuel can be up first 10,000 miles will be 45 pence per mile, and afterwards will be 20 pence per mile, which you can claim it from. Yes, if you're using your car and you're using the fuel. Yes, for your business mileage. So benefit, it can be exempt benefit, it can be taxable benefit. So living accommodation, if your employer provide you car fuel, employer provide you vans, and the fuel provide you beneficial loans, you provide you using for personal purposes, loan, and the gift give you, and that is all the taxable. So job related accommodation, subsidized canteen. Yes, if you removal expenses, if you're moving and you're getting the job from, let's say, Bradford to Glasgow or Edinburgh or Aberdeen, so you are allowed to claim 8,000 new employment allowance. It's called relocated allowance, and that can be exempt, and employer can give you. And payment limit, if you're going abroad and you're staying, only £5 allowed. If you're overseas, is a £10 per night is a free tax allowed. Okay, so if the payment exceeds the whole amount is a taxable, so we need to be careful. Yes. So sports and recreation facility provisions, yes, expenses, and all we need to be very well aware of. So next we're looking the car. For suppose if you have car, different omission levels, so we need to be well aware of which is omission level. So we have to follow the rule in the tax table. So if we need to look around the omission level, I can show you. As please go through, I copied the rates here, and its rates is a given. You will see there omission level, if it falls here is a 16%, it come under. If it's a high, it is a 22%. If it's more than 23, additional 4. So, and if it's a diesel engine, so we need to be follow those rules here. So we look here in this question, we've been given the CO2 car. The for employer listed price of the car was 25 throughout the year. Her employer is only paid 23,500. The car is a diesel, so that will be diesel rate, and RDE2 is the standard for diesel, and employer paid 5,000 toward the diesel, and 50% off is the private use. So we need to be calculate the 50%, and we need to be look around the 107 grams. Yes, rounded down to 105, and 105.95 minus 105 and divided by 1/5, and 2% plus 23% is, and plus is a diesel 4, so 29%. So listed price 25, maximum it can be up to 5,000. So is a 20,000 is a taxable. So benefit is 20,000 amount times by 29%. So there will be taxable benefit which she is getting is 5,800. Less implies contribution. If you paying anything towards fuel, you need to be minus. So taxable benefit is 5,300. Then the fuel benefit, yes, 24,100. That's the limit which is given, and the maximum, yes. So we can calculate the 29% on it because that car is falls under this. And less implies contribution if we have nothing there towards fuel. So taxable benefit. So the amount we need to include in the taxable amount, and we need to be calculate the 20% tax on it. That's all about. Anybody any question? So we need to be each type of benefit we need to be calculate separately, but in this, we are just calculating the car and the fuel benefit, which is more common. But you can look around if you have any other benefit, like you're getting the loan cheaper from employer. So we need to look around the national rate, which is 2% or 2.5 at the base rate, and the official interest rate. And if it's employers charge you more than that, of course, then it's not benefit. If employer charge you less than that, is your benefit, and the benefit we have to be added into the tax amount. Calculate the total income, tax liability in national insurance. So paid on the gross income. So it can be class 1 employees contribution paid by the employees, class 1 employer contribution paid by employer, class 1A contribution that can be paid by employer. So we'll go through all these examples. Class 1 employees primary contribution paid on the gross earning, class 1 employees secondary contribution paid on the gross earning, class 1A paid on the taxable benefits, class 1 employees contribution implies age 16 to state pension age, yes, and the employer deduct from the employee's wages, and the class 1 employer contribution implies age 16 or over paid by the employer deduction when calculating the employer taxable profit. Class 1A contribution paid by employer and deduct when the calculating the employer's tax liability. Okay, this is example now. Employees contribution 12% on the gross earning between 8,632 to 50,000. There will be a 12% NI contribution. So guys, think about 12,500 is a free, but after you need NI contribution is all if is after the 8,632. You're not paying tax on that up to 12,500, but you're paying the contribution, NI contribution, if your income is more than 8,600 is a 12% up to 50,000. If you're earning more than 50,000, you're paying on gross earning exceed from 50,000 is only 2%. Okay, then the class 1 employer contribution. Employer is 13 point all the gross earning above them. So anything you're earning more than 8,632, employer need to pay 13% employer. Employer allowance is available 3,000 deduct from the total class 1 employer liability, not per employees, total. So class 1 contribution is 13.8 on all the taxable benefit based on the same value is used for the tax purposes. Anybody, any question? Okay, so that's we need to be well aware of, and that's we can calculate. And then if this is a example of Jemmy, in this is a salary there, benefit in respect in the company cars and all others and the free meals, and we calculated. Now we calculated is the salary there, benefit respect of the company car and the fuel not applicable in this, not applicable, and the vouchers chargeable for the goods we can, and the total earning is this, and then class 1. So 8,000, 50,000 minus 8, yes. So we calculate the 12%. Then we can calculate NI 72,500 minus 50 is a 2%. So total NI contribution, just NI is 5,405 pound need to be paid toward the tax. Okay, next now we're looking, that's what the calculation for. Next we're looking the pension. So charitable giving, payroll giving, and gift aid. So pension scheme is occupational pension and personal maximum contribution method of giving relief and the employer contribution. So types of the scheme: payroll giving, yes, give as you earn, yes, pay yes, and deduct salary from the employer and paid over the charity. Or taxable allowable, contribute, reduce the taxable employment income. And if you give the gift to the charity, must be declaration, donation, and net basic tax, and HMRC give the charity the tax. However, the additional rate relief, yes, given extending BR and various other, so we need to follow these rules. Okay, we'll go through the example there. They calculate the employment income is 120,000. She give to Oxfam. So Oxfam now personal allowance, of course, now is more than 100,000, 20,000 divided by 2, so 10,000. So less personal allowance. So we need to look around 10,000 plus now the X farm which you giving, that's so personal allowance 12,000 next, yes. So less gross gift aid, so because the tax was already deducted on the previous which you gave the 5,200 times 100 divided by 80, so 64. So you can reduce your taxable income now 113,500, and less limit is 1,000, so 13,500 divided by 2, 50%. So that will be, you can reduce your personal allowance by, so 12,500, and now my personal allowance will be restricted to 5,750 pounds. So revised threshold now. So first will be 37,500, yes, and gross and the gifts, yes. So that will be, now we can calculate the tax on it, yes. So taxable income is 114,250 first, so we need to look around, because whatever you paid 37,500 plus your gross amount, which was, yes, you will see their gross amount, gift aid, yeah, that gross amount 6,500. You can enhance your tax, the basic tax, no, up to 44,000 will be 20% tax on it, then remaining will be 40% tax on it, and then taxable liability will be 36,900 tax, is paying. Anybody any question? Yes, so that's all the working which shows the tax, Then types of pension: occupational pension and personal pension. The method of giving relief implies contribution deduct from the employment income in the income tax calculation, and the method 2 is giving. This is the method: employment income less the pension contribution. Net income next, then your personal allowance, taxable income, then you calculating the tax on it, yes, and we can find the taxable liability. That's the way we can address, and we can calculate the tax. Please guys go through the questions, those are given in our handbook, and if you want to be extra, the question you want to be do, so please make sure just go through, and I copy the links, a lot of examples, those will help you. Please, before next lesson, if you look as a homework, please make sure go through this document, go through the quizzes which I copied the link for you to play, please, before next lesson. That's your homework, yes, and develop your understanding and watch the video how to calculate employment income and property and various other non-saving income. And that's all today lesson. If you have today lesson, we just learn about the different tax calculations, and we discuss about the rules and how we can calculate. We discuss about class 1 and class 1 and class 1A, NI contribution, we discuss pension, we discuss gift aid. So that's all was today's lesson. And the next lesson we'll go to our LO3. Thanks for listening. In between, if you have any question, please drop me email. My email address anjum@ukversity.co.uk. Thanks for listening. Thanks for attending. Thank you. Bye-bye.